चला जाइए। बिल तो उनका एकदम से नॉर्मल है, तो इसमें व्हाट्सएप नंबर, हाँ व्हाट्सएप है, कोई जीएसटी नंबर वगैरह कुछ नहीं, WhatsApp। ठीक है, ठीक है। और अभी मैडम पूछ रहे कि वही स्टाफ के लिए, तो ये था कि स्टाफ को बांट दिया गया।
I think you can start now. Many have joined. Hi,
Sure, sir.
yeah. Hi, good afternoon, everyone. Welcome to the 16th session of weekly knowledge series on indirect taxation, organized by Nivesh Legal Consultants. Today we have with us is Advocate CA Utkarsh Singhal from Allahabad High Court. So today me and Utkarsh will be deliberating on some case laws. The structure of the session is same as previous ones. For the first half an hour, we will be deliberating on some case laws, and for the next half an hour, the floor will be open for everyone to ask any queries, whatever related to GST, and we will try to resolve them as in the as detailed manner as possible. Utkarsh, you want to start?
Sure, sir.
Yes, please.
So, good afternoon, everyone. It is often said that law is not only learned merely from statutes, it is also learned from the way the courts interpret them. A provision may remain unchanged, but a single judicial pronouncement can completely alter the way we understand and apply it. So, as we gather today for our 16th weekly learning session, our objective, as Ayush sir said, is to discuss these case laws and to understand the principles, reasoning, and the practical lessons that emerge from them. So we have a total of around 10 case laws with us, which we'll be discussing each one and one. So should I share the screen? Is it visible, sir?
Yes, yes, it is visible. Yes.
Sure, sir. So the first case law that we are taking up today is with respect to COSA text solutions. One second. The first case law that we're taking up today is with respect to COSA Tech Solutions versus Assistant Commissioner of Service Tax. And this judgment has been rendered in the case of by the High Court of Madras. The issue in this particular case is whether a general penalty under Section 125 can be levied for delay in filing returns when late fees under Section 47 is specifically payable for such delay. Now, the issue here is that recently a lot of notices, flooding of notices has been done with respect to Section 125, wherein GSTR 3B return has been filed in a delayed manner. Now, the issue which arises here is, can the department punish the same default twice when, while filing the next return, late fees for the previously filed late return has already been paid? So this particular issue has been dealt in multiple cases by the Madras High Court, and the findings have been very simple and very clear. They've clearly said that the court held that the general penalty under Section 125 is only applicable in case there is absence of any other penalty in the entire GST Act. And now, since for late filing of return, late fees has been specifically prescribed under Section 47, then imposition of a further general penalty under Section 125 for the same default is unsustainable. Accordingly, the imposition of general penalty under Section 125 was set aside, where the liability to pay late fees was sustained. So there are multiple judicial precedent on this particular aspect, and the supporting judicial precedent we have already compiled and presenting here for your kind reference. So be it the case of TVL Janssen, Kalanthar Madina, Kandan Hardware Mart, or TVL RPGA traders, all these rulings have been given by the High Court of Madras citing the same ratio that when late fees has already been paid under section 47 for delayed filing of return, additional penalty, double penalty on the same issue cannot be levied. So this is the first ruling that we were supposed to discuss, and we discussed it. Moving on to our next case law, and this particular case law follows the ratio decided by the Andhra Pradesh High Court in the case of golden traders. And I also feel happy to share that the counsel appearing in this particular matter is my senior who with I'm associated with, and I have the opportunity to learn with him. So the facts of the case are very simple. We've seen multiple cases with respect to e-way cases where goods are intercepted, vehicle is detained, and penalty is imposed, for which we had a clarification issued by the CBIC by Circular 64, wherein it said that for minor issues, the penalty should not be imposed up to 200%, and a minor penalty, say up to 5,000, could be imposed. Now, in this particular case, and in the case of golden traders, an alternate or a fresh argument was advanced by the counsel of the petitioners. They said that when the goods are moving from one place to another, say the goods are moving from West Bengal to Delhi in this particular case, and they were moving via Gautam Budh Nagar, that is Noida in the state of Uttar Pradesh, the mobile squad of Noida intercepted this particular vehicle, detained these vehicles, conducted a verification, and imposed penalty. Now, the issue which has been raised by the counsel of the petitioners is very simple. Whether the state GST authorities, that is in this particular case, the Noida, the state of UP, whether the state GST authorities have the jurisdiction to detain and impose penalty on the goods that are part of the interstate movement, especially when such goods neither originate nor terminate within the state, they are simply passing through the given state. So there is no role of that particular state who is imposing penalty and in the IGST head and recovering it from the petitioner. Now, upon this particular argument, the court gave their findings. But before understanding what the findings were, let us understand what the contention of the revenue was in the given case. So the revenue strongly contended that by virtue of cross empowerment under Section 6 of the CGST Act and IGST Act Section 4, the UP GST authorities were empowered not only to stop and verify goods in transit, but also to impose penalty where prescribed documents, particularly e-tax invoice, were not accompanying the goods. So in the given case of this Maruti Enterprises, the UP GST authorities alleged that they said that the e-way bill is there, the tax invoice is there, but the party from whom you have purchased the goods was supposed to issue you a e-invoice, and instead of e-invoice, only a regular invoice is there. So this became their basis for detention of goods. But the argument which has been advanced by the council is that whether the GST authorities of UP were empowered to even detain the vehicle and further impose penalty when the goods were neither originating nor terminating in the particular state. The findings of the court are as follows. The court said the cross empowerment is not interstate empowerment. The cross empowerment between central and state GST authorities in respect of taxable transactions pertain to intrastate. So intrastate cross empowerment is there, but interstate empowerment is not there. Further reasons were given by the High Court, Honorable High Court, were that the transit state can inspect but not penalize. So the UP GST authorities have the power to inspect, detain, but they cannot impose penalty. What they can do at the maximum is remit this particular information to the concerned GST authorities, to the concerned state authorities, and let go of the vehicle. They are not supposed to impose penalty. One of the bases of giving this finding was that there is no tax incidence which is arising in the state of Uttar Pradesh, and hence they have no penalty jurisdiction. Further, if this imposition of penalty by the transit state is allowed, then repeated penalty by multiple states, repeated penalty by transit states would violate the free trade under Article 301. As regard to the reasoning, as regarding to the merit as to why the UPGST authorities detained the vehicle, wherein it said that you need to carry a e-invoice rather than a simple tax invoice, the court simply maybe reiterated the gist or the substance of circular number 64, which said that for minor issues, penalty should not be imposed. Also, this particular aspect of e-invoice should have been given is not something which can be ascertained by the purchaser. It is dependent upon the supplier's turnover, which, say, if I am buying something from someone, I cannot determine whether he is liable to raise a e-invoice or not. So it is not within my purview, neither do I have the knowledge, nor in any business circumstances in a practical scenario would I be asking them, sir, whether are you liable to generate an invoice, so you need to give me an invoice. So it's a impractical scenario, and hence basis this they also said that this is something which should not have become a ground to detain the particular vehicle. So this is what the judgment is. Now, before I move forward with the next case law, my request to Ayush is, we have two judgments on this particular scenario. One is Golden Traders by the Andhra Pradesh of High Court, and this Maruti Enterprise by the Honorable High Court of Allahabad. My question to you, sir, is will these two judgments actually make a difference in how interception is done of in the e-way bill cases, whether there is any possibility of amendment in the law or in the provisions?
See, Utkarsh, according to me, this is one of a kind judgment, and a big relief I can say to the taxpayers, because many a times I have only in Allahabad High Court, or maybe not in Allahabad, in UP, wherever. So when the goods are moving from Bombay to Assam or from Gujarat to Assam, it has to cross UP. And many a times my client is in there in Gujarat who moves his truck from to Assam. Many a times his truck has been stopped in UP, somewhere in Agra or in Noida. And I have been fighting all these cases. So now, when the Allahabad High Court clearly said that since the incidence of tax does not belong to UP in this case, because the supply is being made by Gujarat and the place of supply is Assam. See, if I see these judgments, Section 6 related to, if to go for further in this judgment, Section 6, if talks about only the cross empowerment within the state, can I say that only in my example, only the Assam state government has the power to levy penalty, not even the Bombay or the Gujarat government has the power? Because being an incidence-based tax or being a supply where the supply is being concluded, where the incidence of tax has been given is the Assam state in this case, Assam. So then only the Assam should have the power to levy penalty whatsoever in this case. But
Right.
I mean, using this judgment, there are a lot of issues that can be settled in e-way bill, because of e-way bill, if you stop a vehicle in any of the state where the assessee does not have a registration, it gets very difficult. First of all, yeah, department gives you a temporary registration, but it gets very difficult, first of all, to find a local consultant over there and then file an appeal. First to get the goods released and then file an appeal, get the appeal heard, and then get the refund. So it is a very cumbersome process. And many a times I have seen the clients following their amount of penalty they paid. Maybe maybe
Considering
1
the
lakh,
cost
2
involved.
lakhs. Yes, because of the cost involved, they do not, give any heed to just, to get the peace of the mind.
Right.
So my question, I am still on the doubt. I very much true that Section 6 does not give cross empowerment to the other states, but it does not give cross empowerment to the originating state as well.
Right.
So yes, let's see what other, I mean, Allahabad and Andhra Pradesh are there with us, and the good part is that there is no negative judgment on this issue. So we do have two positive judgment, but no, if I'm correct, yes, no negative judgment on this issue,
Yes,
right?
there's
From any of the
absolutely
high courts. Yeah.
no, no.
So if there is no negative judgment and only two positive judgment in our favor, let's see what I mean, this will be particularly challenged. The Bambino High Court, as we were discussing, Bambino Agro challenged in High Court, given by Allahabad High Court, challenged in Supreme Court again.
Yes,
So I'm definitely sure this will also be challenged in Supreme Court. And now the law will be amended or not. Second question, that whether the law will be amended or not, the government has also need to keep in mind the difficulties that the taxpayers face when these goods are detained in any or anywhere part of the India where they do not belong.
right.
So I mean, this is a beneficial provision. I mean, if the vehicle is stopped in UP also, they do have every infrastructure to transfer that case to, I mean to say that they can communicate all these discrepancies to the destination state, and the authorities over there can take the necessary actions, whatever are required. You need
Yeah,
not to take an action in UP only if you have detained the vehicle in UP.
right. Also, the
Yes.
timelines will have to be considered in the given case, wherein the show
Huh.
cause notice has to be issued within so many days of detention, and within 7 days of show cause notice, the order also has to be passed.
See, yeah, we
So,
do have this circular. See, all these timelines are given in the circular. I don't think so. Section 129 or any of the rule mentions. Rule 138, I think, is there for the detention of goods.
yes,
Rule 138 or Section 129, as far as I remember, does not give any of the timelines. All these timelines are mentioned in the circular. Or is it mentioned in Rule 138?
it's mentioned in Rule 138.
See, these, if giving, if the, giving of this is a show cause notice and all within the timeline is a problem. See, I have to move my goods. I have to move my goods from UP to Assam. It may take 2 days, 3 days over there. And so, see, if it is stopped in UP today, all the proceedings, all the intelligence or whatever the information that the UP authorities have gathered, they may transfer them electronically to the Assam government.
Assam government.
When the state this crosses the Assam border, the truck crosses the Assam border, the timelines can start from then there. Maybe then they such amendment can be brought in law to discuss about the timelines, because timelines are in our favor only, SSC's favor only. See, if the department does not adhere to the timelines, we strictly go to the courts and say the timelines are not adhered to, and therefore this is not valid at all. But if department is facing the challenges in these cases to adhere to the timelines, because because this intelligence or this information has to be transferred to some other state to the destination state, then these timelines can the government can take care of these timelines by maybe amending this, maybe, or any other solution that they may have.
Also, as you
Huh.
rightly said, the execution of this, if this particular ruling, the
Hmm.
execution of this particular ruling will also be a challenge, because if the goods have been detained, say in Ghaziabad, and the
Hmm.
goods have been originating in West Bengal, and
Hmm.
the Ghaziabad the authorities, after detaining the particular vehicle, remits all the electronic evidence to the Assam or West Bengal, wherever the goods have been originated from, then handling the proceedings would become a that difficult scenario. But
Hmm.
let us see how things proceed on this particular scenario.
See, the major difficulty would be in the detention of a vehicle where they confiscate the goods. If I have all the material in hand, and it requires the confiscation of goods in, see, UP government has stopped, UP authorities have stopped the vehicle and requires confiscation of goods. But by this cross empowerment, it does not have the power to confiscate or to penalize under Section 129 or under Section 130, whatever it is. And by the time the good reaches the Assam, they may have been tempered with, they may have, they may or may not reach Assam, or any other. See, the department may not have hold of the goods to confiscate them. They may take action against the taxpayer by issuing a show cause notice independently, whether or not they have the goods. But at that time, see, there is one more provision that to release the goods, you have to pay 200% penalty. Right now, in order to not to pay the penalty, once the goods are released and I have not paid the penalty in UP, I may not, take my goods all the way to Assam. There are many provisions under which the authorities can take action against me. Different provisions. They can issue a show cause notice. They can block my credit ledger, cash ledger, anything. But at that point of time, 200% tax penalty has not been paid. Right? This may be a hurdle for the government to say that the taxpayer can, I mean, run away with the goods or whatever. This is just a far-fetched interpretation. Any relief I think should be given in this, because detaining the vehicle in any of the state where the supplier or the recipient does not belong to leads to many hardships that I have seen.
Understood, sir. I
Yes.
think one of the participants raised their hand. I think Kishore Shah sir or somebody else, I think, raised their
Yes,
hands.
someone raised the hand, but now they haven't. I think we can move forward if.
Okay, so we'll move forward with the next case law. So the next case law is a very interesting one, or rather, it could also be said to be a very simple one. The background of the particular case is as follows. I am a clinical establishment. I enter into an agreement with another hospital, and the terms of our agreement are as follows: that I will be providing doctors, specialists, paramedical personnel, and other medical related people to render or to cater to the patients of the another hospital. Now, whatever revenue is being generated from those patients, 75% of that particular revenue would come to me. So it's a simple arrangement of providing medical services. I am a hospital. I enter into an agreement with another hospital to cater to the patients, and for that, 75% of the revenue that is being generated from the patients shall come to me. Now, what the department said is, or undertook is, continuing their ideology or stand of taxing everything into business support service in the service tax regime, to following this ideology in this GST regime also, they said that this particular arrangement is a taxable support service arrangement under SSC 9985, and they started demanding GST at the rate of 18%. So whatever revenue is being derived by me, 75% of the revenue from the other hospital, the department said it is a taxable support service and you need to pay 18% GST on this particular transaction. So now the issue which comes up is whether healthcare services provided by one clinical establishment to another hospital loses the exempt character and become taxable support service merely because the consideration is received through a revenue sharing arrangement between two establishments. So the key observations and the findings of the Honorable High Court of Karnataka were as follows. It clearly said that the substance of service will prevail over contractual form. Whatever the contract is, whatever the revenue sharing agreement is, whatever it is, if you see the nature of services that are being rendered are medical services, are the service of diagnosis, treatment, and medical care which is being rendered to the patients, and hence the classification is to be based on the substance of the service and not on the contractual agreement. So these particular services, being healthcare services, would be rendered exempt by virtue of notification number 12/2017 CTR. It also said that the revenue sharing does not convert healthcare service into support services, and they placed reliance upon CBIC circular number 32, which clearly said that any services that are being rendered by doctors, consultants, and technicians engaged by hospitals constitute healthcare services and are exempt. So the key finding is what cannot be taxed directly cannot be taxed indirectly through reclassification. Now, moving forward, Ayush sir, if you have any inputs on this
Yes, I mean,
particular.
correct. This has been the jurisprudence in the previous service tax law as well. The mutually two parties come together and provide the services. So, I mean, many of the cases were there in service tax as well, where see the clinical establishments works on then this basis only. The doctors are not their employees per se. Whatever the services the doctors provide, 75%, 80%, whatever the ratio they decide, is being held by the uh, clinical establishment or the hospital per se, whosoever has the infrastructure and all the machines, and the doctors get some part of it. I think this is also the same facts where then the doctors or some other hospital may be there. So ultimately, what both of them together are doing are they're providing the healthcare services to the patients together by coming together and providing such healthcare services. And we do have circular also to support these contentions. So yeah, I mean, I do not have any particular specific comment on this, and we can move forward.
Yes. So if any of the participants have any particular input or comment to this, they can specifically unmute and speak. If not, I used to have a sort of a divert tangent or a discussion or a request of
Yes.
input. See, this particular ruling states that the agreement is irrelevant. The nature of the service, the substance has to be taken into consideration, and since it is a
Substance over
healthcare
form.
service, it is an exempt activity. Now, if
Correct.
we, I'll just take a different tangent, and we can, if it gets too elongated, we can surely get back. My point is, if we go back to the Tata Sons judgment with the of the this Honorable High Court of Bombay with respect to Docom and everything, wherein it said that any arbitral award is not leviable to GST, being a decree of the court, and it's a compensation. It's in the nature of compensation, and hence, by virtue of Circular 178, it should not be taxable.
Correct.
Now, in the case of Tata Sons also, what stand the department took is the Tata was supposed to find a buyer for Docomo, and since it was taking time, they said it was mutually agreed between Tata and Docomo that a 6 months period will be provided to Tata to remit this 8,500 rupees or some whatever 8,500 crore rupees to Docomo, and in the meanwhile, Docomo will not enforce any recovery proceedings in US and UK from the Tata Land Rover Jaguar units. So what the department said is, whatever amount is being decided by the arbitral award, say we accept it as a compensation, but this particular agreement between Tata and Docomo, wherein Docomo has agreed to withdraw the recovery proceeding from US and UK, this is an independent agreement by virtue of Circular 178, by virtue of this Schedule 5E. Since this is an independent agreement, hence you are liable to pay GST. Now, this entry 5E of Schedule 2 says it requires
Agreed
two
upon.
essential elements. One is an independent contract, and second is consideration for such act. But
Correct.
if you have this particular clause in your agreement itself, then it becomes a compensation for a breach of contract, and then it becomes a compensation of breach of contract, and it is not taxable. So
Correct.
in this particular scenario, agreement is being given a lot of weightage. If you have it in the original agreement, it is a compensation and hence not taxable. But if at a later stage it becomes an independent agreement, then GST is leviable. So is there any
Correct.
contradiction between two, or how should this be viewed?
See, all the time, from what I understand from a query is that whether we should look at the agreement per se, because in this judgment of Messrs. Healthcare Global Enterprises Limited, maybe the Karnataka government is saying that we have to look above the agreement at the substance of the transactions. And in the second case of Tata Sons that we are discussing, in that case also the High Court particularly relied upon the agreements only and then held that this is an arbitral award and then it's compensation and everything, and
It
GST
should
is
not be
not
taxed.
leviable.
Yes.
GST is not leviable, right? If you see both the similarity I see in both these cases is the nature of the transaction has been determined. So, what is the nature, whether there is any supply or not, or how the supply has been mainly made? In this particular case, even if I look at the agreement, what what is the agreement between the two parties? If there is there any clauses of the agreement or any gist of the agreement? What is there? So what I understand is what should have been the agreement is this is between clinical establishment and doctors, right? This
Yes.
particular case. So
Both are clinical establishments in the given case.
see what may be the agreement is that one may be procuring patients and another may be treating them. One may have the infrastructure, right, of everything. Ultimately, both of them together are providing the
Healthcare
this
services.
healthcare services only. It is only that one may not have the infrastructure and the other may not have the reach,
Right.
right? So clubbing them together, clubbing the resources together, it does not in anywhere in the agreement it is not, it should not be written, or I think it has not been written that they are not providing any sort of healthcare services.
Right.
what is the major emphasis that the department made in this case is of the agreement. That is the particular finding that I want to know. If the agreement in itself says that one clinical establishment will provide services to another clinical establishment and that the clinical establishment will provide services to the patients, then also in this case I can say that the
It would be
clinical
healthcare
establishment
services
has
only.
provided healthcare services only, right?
Yes.
So again, it is an indirect classification, reclassification, as you rightly said, and taxing that indirectly, that healthcare services.
Is not
Similarly, in the
permissible.
Tata Sons case also, even if the agreement has been emphasized upon, the nature of the transaction has been looked into, and specifically when there was an arbitral award, and arbitral award, it was decided that Docomo was will not,
Withdraw.
initiate recovery proceedings, will withdraw the recovery suits or whatever they have filed in the other
US
countries.
and UK. Yes.
Yes, ultimately it is an arbitral award, and and it has been as a part of a compensation only. So there is nothing as such which attracts taxability under clause 5E of Schedule 2 that is agreed to tolerate an act.
Right.
So this is what I think is the similarity between the two cases is.
Okay. Thank you, sir. So
Yes.
we'll
Yeah.
move on to the next case law. We'll skip this particular case law of Manoj Kar and we'll take it up at the end. For now, we'll move on to our next case law, and it essentially asks the question: when does a vegetable stop being a vegetable? So in the given case, what the issue is, the fact rather is the appellant is a manufacturer of ready to eat packaged foods, say MTR or whatever it is, ready to eat packaged foods such as some curries. Whatever what they do is they have pre-packed curries. You just have to put them in the pan, put a little bit of water, and then your curry is ready. So they applied for a advanced ruling and said that, and asked the particular question whether ready to eat packaged vegetable curry preparations would be classifiable as preparation of vegetable or as edible food preparations under heading 2106. The contention or the request or the stand of the appellant was this: what the curry which we are selling is ready to eat curry is nothing but ready to eat packed vegetables which are preserved using retort technology. So what we have essentially is vegetables which are being preserved through retort technology, and this is not a curry. So this is the contention which was raised by the particular appellant. The appellant contended that the products were essentially vegetable preparations preserved through retort processing. Retort processing is nothing but a way of increasing the shelf life of the particular product. Now, the next stand which the appellant took is they said since heading 2005 specifically covers vegetables prepared or preserved, they've stressed on the particular aspect of the vegetables being preserved otherwise than by vinegar or acetic acid. Hence, classification under Chapter 20 should prevail over the residuary entry heading 2106. So, 2106 is for curry, 20 is for vegetables prepared or preserved. Now, the findings of the advanced ruling were, one second, no. So the findings of the appellate authority of advanced ruling were that the final product must be viewed as a whole. What you are marketing is a curry, and once vegetables are processed, cooked, seasoned, and marketed as a ready-to-eat curry, the product acquires a commercial identity different from that of its constituent ingredients. So it is no longer simply a vegetable. It has been processed, gone through multiple steps, and at the end marketed as a ready to eat curry. It is not being marketed as a vegetable, and curry is specifically distinct from prepared vegetables. So according to the AAAR, the products were not merely prepared or preserved vegetables, they were completely ready to eat curry preparations intended for direct consumption for after heating, and therefore possessed a distinct commercial identity. Now, if we move on to the next findings of the particular ruling, chapter 21 Chapter 21 specifically covers edible preparations, wherein it says food preparations meant for human consumption, whether consumed directly or after minimal process, such as what we do is we just put the curry in the pan, put a little bit of water, and cook and eat it. So chapter 21 is a very specific classification which has been given for the curries, and hence the products were found to be fit positively under chapter 21. The appellant also tried to take two additional stands, stating that the specific entry principle does not apply in isolation. What it essentially said is that a specific entry of vegetables, of preservation of vegetables, must prevail over a general entry, which is entry number 21. Entry number 21 is a residual entry in the classification series. So the advanced ruling authority, while accepting this particular contention of the assessee, they said since the product, as in the curry, is clearly being identified as a ready to eat edible preparation, which is directly falling under chapter 21, hence it should be classified under chapter 21 as a curry and be taxed accordingly. So this is again a clear cut, seemingly logical judgment or the advanced ruling. Ayush sir, if you have any inputs on this?
To be honest, I was reading it again and again, and I was thinking
As to
this
how the,
is, yes, as to how an advanced ruling authority can give a logical
yes,
ruling. It may not be in the favor of the assessee. I understand because many of the advanced rulings are not in the favor of the assessee though. But very minimal or rarely they give any logical
logical,
reasonings. Yes, yes. So because yes, vegetable preparations and ready to eat items are totally different per se. Vegetable, see these we have get Haldiram cooked foods. Say we have dal makhni or paneer makhni, whatever. We just heat it in a pan and eat it. There is nothing else. Nothing single thing extra is required to be done on all these cases. So this is similar to that ready to eat edible preparation only. And ready-to-eat edible preparations are clearly classified under Chapter 21, whereas Chapter 20 classifies vegetables, which I think, according to me, are not readily, edible. See,
yeah,
I open the packet, maybe by after eating it, I cannot readily eat them.
yes.
So only,
This is
I
a
mean,
very clear, simple judgment, and
curious
I'm not
judgment
sure
is.
why even
Hmm,
this, uh, why this was even went for
hmm,
a ruling, why even the petitioners went for the ruling.
right, right. I can
So
move
I think
forward.
we can move forward.
Yes,
So
yes.
the before moving to the next particular case study, the question which has with respect to the next case study, the question here is: suppose I am buying a flat and I ask to the developer that I want a preferential location flat. Say I want a sea facing flat. Say I want a park facing flat. Say I want a city facing flat. Say I want a road facing flat. So can the view from my balcony become a separate taxable supply? Is the basic question before moving on. This is just the gist of the ruling which we're going to discuss next. Or when someone pays extra for a park facing flat, are they buying a separate service or supplying or simply paying more for the same flat? I'll repeat the question or the query. When someone pays extra for a park facing flat, are they buying a separate service or simply paying more for the same flat? This is the bone of the contention of the next case law that we are going to discuss. It's DLF Limited versus Commissioner, rendered by the Honorable High Court of Punjab and Haryana. The issue in this given case is whether preferential location charges collected with consideration for construction of flats are taxable separately or as part of the composite supply of construction services. Now, in the given case, the petitioners initially went for advance ruling, wherein both the advanced ruling authority and the appellate authority of advanced ruling held that these charges were taxable independently. There was an advanced ruling, then appellate authority of advanced ruling upheld the ruling of the advanced ruling authority. Now, pursuant to this issue was suo moto or independently taken up by the 54 GST Council meeting, and pursuant to its recommendation, the government clarified through circular number 234 stating that PLC is an integral part. Is an integral part when you're buying a flat. It is an integral part of that particular purchase and forms part of the composite supply of construction services. The court noted that the choice of location of an apartment is intrinsically linked to the supply of construction services. Consequently, such preferential location charges cannot be viewed separately or independently, and they would form part of the overall consideration for the construction of the apartment. And when you buy it before issuance of the completion certificate, it would attract GST at the same rate as construction services. And hence, by virtue of this, say, recommendation and then the particular clarification by the circular, both the advanced rulings by the advanced ruling and the appellate authority of advanced ruling, they were set aside. My question or understanding is, so whether this judgment would have gone either way, wherein it could have been said that this payment for a park facing flat is a luxury, is maybe an entitlement because you have certain resources with you, and hence it is a separate service. Could this have gone otherwise? Or is this ruling perfect in its own sense?
Yeah. See, when we discuss the concept of composite supply, there naturally comes, the only thing comes into mind whether they're naturally bundled or not.
Right.
The question is that whether the PLC charges, the PLC that has been collected in this case, whether it should be treated as a part of a flat only or it should be separately charged as 18% as held by AR and the AAA, right? And
Yes.
when the Punjab and Haryana got saying that it is a part of the flat only and should be taxed at the rate of flat.
Right.
So whether it is naturally bundled or it is not naturally bundled. See, naturally bundled, one of the major constituent to decide whether it is naturally bundled or not is what is the industry practice of it. If I go and say I need a park facing flat, I also know that floor wise rates differ, facing
Right.
wise rates differ, garden
Yes.
facing, sea facing, or whatever the facing is, rates differ. And I tend to pay the price whatever the developer asks me. He may add some PLC charges of the sea facing or sea facing and on, and I may separately show it in the invoice as well, preferential location charges, and but ultimately this is being sold as a part of the flat only,
Yes.
right?
Absolutely.
So all these services, again, see, I get government meter in this, I get water connection in this. All these charges, all these are collected separately. Electricity meter charges are collected separately, water meter charges are collected separately, and I think two, three other charges are collected separately. The question is, what is the treatment of those charges? This circular that we're discussing, I don't remember exactly, 159, I think, does just discuss about that charges also. I mean, I 234, okay, 234. Because according to me, if I'm buying a flat along with all these services, an entire developer or the entire construction industry has been, charging offer all these services only together. So all these services constituent together should constitute as a composite supply only and nothing else. So this judgment in my view is completely a correct judgment. And it should always be treated as a composite supply only. I mean, we have also given many opinions on this to clients, considering this as a composite supply only. I was once defending this case before the DGJ as well, wherein the client paid 18% tax on the PLC charges. So there also on some other tax, on some other thing, he was not paying tax, but it was all inclusive. So there also we defended it like the PLC charges are required to be taxed at the rate of the flat only and not at separate, should not be considered as a separate supply at all. Because this has always been the industry practice to sell these services like this only.
Understood. So Mahesh Dave sir has also said that the basic instant is the buying of the flat and the location of view should not change the product, that is the flat.
Flat, correct.
Perfect. So I think we can move on to the next ruling.
Push bhai,
Yes,
I
sir.
think it is 12:50:47. I think, can we open the floor for queries if
So what I'll do is I'll just okay. So what I'll do is instead of going through the entire
yeah.
case, I'll just
Ah,
summarily say the
sure,
case
sure,
ruling
sure,
in
sure.
1 minute.
Yes,
So the
yes, yes, we
next,
can, we can.
so that the participant gets the whole view.
Hmm.
So the next case law is very simple, wherein it says that the petitioner was manufacturing solar inverters which could only be used in a solar power generating system. These solar inverters could not be used normally as we use in our households. They were specifically designed and manufactured to be installed while installing a entire solar power unit. So now what the department said is, irrespective of the use, notwithstanding the use in solar projects, the essential characteristic is a solar inverter, and hence you're liable to pay GST at the rate of 18%, and you're not allowed to take benefit of the concession rate of 5%. The court ruled in the favor of the assessee or in the favor of the petitioner, stating that the product identity must be examined in its functional context. That is, since this particular solar inverter can only be used in a power generating system, and entry number 234, which gives this concessional rate, clearly includes solar power generating system and solar based devices. So when you talk about a particular system, it involves everything. It involves your PV panels, it involves battery, it involves your solar inverter as well. So considering this aspect of entry number 234 and other judgments in the case of HP, wherein what actually does a system mean, taking all those into consideration, it was held that a solar inverter which is being manufactured specifically for a solar power generating system would be granted exemption, or would be granted, sorry, not exemption, would be granted concessional rate of 5% as held in entry number 234. So this is the gist of the judgment. Now, the two judgments here we have is Bhupendra Kumar and Sanjay Construction, wherein there are both of these are contrary rulings. One is the ruling of Honorable High Court of Delhi, and the other is Honorable High Court of Allahabad, wherein in both the cases interest and penalty were not quantified in the show cause notice. The Honorable High Court of Delhi stated that since it does not it is the absence of quantified figures does not render the notice invalid. Whereas on the contrary, what Allahabad High Court has said is that since you have failed to quantify interest liability in the show cause notice, the show cause notice is invalid. What they relied upon is section 75(7), stating that the amount of tax, interest, and penalty in the order should not be in excess of the amount specified in the notice. And since in the notice there is no quantification of interest and penalty, it cannot be levied in the order. Now, the stand which the department took is, they said, we take the stand of section 75 subsection 9, which says that interest on tax short paid or not paid shall be payable whether or not specified in the order. Against this particular stand of the department, the court observed that section 75(9) is inapplicable to the given case, because section 75(9) talks about interest or penalty, interest not being specified in the order, whereas in the given case, interest is not being specified in the notice. So these are two contrary rulings of the Allahabad High Court. Now, just one last case study which we skipped at the earlier stage is with respect to Manoj Kumar. This Manoj Kumar case study follows the judgment of the Allahabad High Court in the case of Bambino. Now, this Bambino case, when it came out, it changed the fate of multiple cases, because prior to this, the Honorable Allahabad High Court was taking the view of not condoning the delay of filing appeal beyond the period of 4 months. But when this judgment of Bambino came, it actually gave a lot of relief to multiple assessees. The essence of this Bambino judgment is mere uploading of notice or order on the portal is not effective service. The effective service would only be when, say, me as the taxpayer, when I see the notice or the order. And there is no mechanism as of now on the GST portal wherein you can see as to when the taxpayer has actually viewed the particular order. So if there is a case and I as a taxpayer come to the department and say, sir, I viewed this particular order on so and so date, not on the previous date when it was uploaded. So that particular stand of mine has to be accepted by the department unless and until they have some material to show otherwise, that no, I got to know of this particular order way before what I am speaking. So this was the ratio which was decided in Bambino, which was followed in this particular case of Manoj Kumar. Now, what the department has done is they filed an SLP with the Honorable Supreme Court, wherein as of now the Supreme Court has stayed the operation of Allahabad High Court judgment till the next date of hearing. So now, since the Supreme Court has stayed this particular operation, what is the actual status, current legal position of the status of Bambino Agro judgment? Now, this particular judgment is, as of now, is not an unqualified binding precedent, but the ratio of this Bambino judgment can definitely be used while pleading, if anybody is pleading before the Honorable High Court. So now the reliance can be placed, but in the essence of bona fide practice, a clear disclosure should be made that the Supreme Court stay continues to operate. Nonetheless, the Supreme Court has stayed the decision of Bambino Agro of Allahabad High Court. All the other High Court decisions on the same aspect have not been stayed, and they can be used as and when they required. So I think we are done with all the case studies. One more is left, which in which it's a simple case that the show cause notice was and the order was served to the previous address, and it should have been served to the current address, and then the proceedings were quashed with the direction to serve on the new address. So I think we're done with the case studies, sir.
Yes. Now we can
Yes.
open the floor for everyone to ask their queries, whatever related to GST. If anybody has any query. Today, I think nobody has any queries. Everybody has understood GST very well now. Or everyone has given up the hope.
So I think this is all what we have for today's session, sir.
Yes. Govinda Otwani is saying, asking how to file appeal for the unregistered person. We have to take the temporary registration number, right, Utkarsh? I think.
Yes, sir. Yes, sir. From the department.
From the department, we have to take this TR and temporary registration number, and then you can file an appeal for an unregistered person as well.
Yes.
But there is one catch in this, Govinda ji, if I may discuss. If you are an unregistered person, first of all, tell us how an order has been served to you if you have to file an appeal. How this order has been served to you. If it has been served on mail, fine. It has been served through courier, speed post, fine. But if it has been served, you got to know, suppose you are a director in a company and it has been served on the company, notice has been served or the order has been served on the company. And your name is just there that the personal penalty on the director is also confirmed in the same order, and you just got to know from that yes, penalty has been confirmed on me also. Then I will say that it has been not served independently to you. So you can anyway challenge that service of notice to you. Because in that case, department is required to give you a TRN and upload that on that order on that TRN, or maybe by serve you the same order by speed post or by email ID.
You hear my voice?
Sorry?
Are you hear my voice?
Yes, yes, sir. Yes, sir.
My department have a data. My client turnover is more than 20 lakh. On the basis of data, I send the ACN via speed post. But actually, client doesn't have a turnover more than 20 lakh.
So one thing that I would like to clear in this case is, in case of unregistered persons, section 73 and 74 does not apply. The assessments are governed by section 63 or 64, I think, if I'm sure, because in there it is specifically said that notwithstanding anything given in the section 73 or 74, because the timelines of serving the show cause notice and the orders are also different under that section. So you will also have to look that whether those sections have been followed or not, specifically related to unregistered person in the GST.
Okay, and can I argue? I received the speed post 1 day later, so I can argue about I receive order after 73, 74
So you
timeline.
can very well argue, but timelines of that same, what is the section for that? I'm just checking. What is the section for unregistered person? I do have 64, I think, because in this
63.
it is in there it is clearly written that all these are not applicable. Timelines of that, just a second. I may have
63.
63. Utkarsh, if you have, you can read it. What is written?
It says where a taxable person fails to obtain registration even though liable to do so, and then so and so.
63.
issue an assessment order within a period of 5 years. So an assessment order can be issued within a period of 5 years from the date specified under section 44 for furnishing of annual return for the financial year to which the tax not paid relates, provide that no such order shall be passed without opportunity of being heard.
So assessment order section यहाँ पे पास हो रहा है ना इसमें section 63 में. Section 73 74 में assessment order नहीं पास होगा ना.
63 में पास हो रहा है.
Right. Anil Kumar Valicha ji has raised hand. Yes,
हाँ.
yes.
Yeah. Sir has raised a very good question, which I also felt at the time of discussing our DLF case. Sir says that PLC as a composite supply. We discussed that preferential location charges should be taken up as a composite supply. So by virtue of extending that logic, should parking fees and club membership charges also be clubbed as a composite supply and be taxed accordingly at the rate of flat and not separately at the rate of 18%?
Yes, sir, you have already read my question in the chat box. Please, we can just have a discussion on this.
Ayush, sir.
You want? See, I already discussed what I was discussing when that government meter charges or something etc. are being taken, are being charged by the developers in this case. So whether they are naturally bundled or not, according to me, all these supplies, whether even if it is a free parking charges or what club membership, all these are the part and parcel of buying a flat in a society only.
Right.
When I say naturally bundled, there are various components to it, or how do I determine whether a particular supply is naturally bundled or not? See, invoice doesn't matter. Even if separate line items are there on the invoice, it doesn't matter. Separate invoices also doesn't matter. What matters is what the agreement is. If I have to supply a service under a single agreement, if there are separate agreements, then I can say that there may be a separate supplies at all. But if there is a single agreement in which I have to supply 4 services, maybe I'm raising different invoices for those 4 services. But a single agreement has been clubbed, and as a market connotation, I say that these all services are provided together or are clubbed together. I can say that these are obviously naturally bundled. So according to me, this club membership and PL, all these charges should also fall under the same circular only to 234, I think, and only the rate applicable to flat should be applicable. I mean, if you have any other view on this.
I feel as tax professionals, when we defend the client or when we have to take, I believe this is also not a very aggressive view. This is a very logical view that all these charges, club membership and the parking charges, should be clubbed at the composite rate of the rate of flat itself. See, when I'm going to buy a flat, I am not only looking at the flat or the internal flat. I look at the entire society. I look at the amenities. I look at the entire vibe and everything. It's not solely restricted to fourth floor, first floor, second floor. It is the entire society that I'm looking at the entire area, and that becomes my basis of buying a particular flat or not in the particular society. Even though the tangible value of the flat is more predominant, but whether I'm buying a flat in that particular society is also dependent upon all these other aspects, whether I'm getting a particular car parking, whether there's a park, or whether there are other aspects also included. So it does not seem like an aggressive view, and it should be taken as a composite supply, and we charge at the rate of flat itself at the rate of 5% instead of 18%.
Correct. Mahesh Javedi is also saying the same thing in the comment box.
Now, Vinod sir, I think Mahesh sir has agreed with our views. Now, Vinod sir has raised a particular question.
Okay.
Can the penalty be demanded where ITC has been wrongly availed but not utilized? Okay. Sir, anything? So, my experience in this is, I think there's one recent
Words availed or utilized or overwritten over there. First of all, if I read the law particularly, availed or utilized.
Availed but not utilized. So in one case, what is happening is there was a particular ITC which was taken, which the department said you're not eligible to take this particular ITC. Now the assessee contended for a long period of time that no, this IT is eligible and I'll take it. After a certain period of time, the taxpayer said, okay, no, I will reverse this particular ITC. but interest should not be applicable because I have more than sufficient balance in my
Sufficient.
electronic credit ledger. Now, what the department is saying is, okay, now you have reversed the ITC, but then you have reversed the ITC beyond 30 days of show cause notice, and hence penalty shall be leviable. You bring me a
Leviable.
case law, you bring me a judicial precedent wherein you say that the penalty should not be levied even if the interest is reversed after 30 days, and I will drop the penalty charges. So, what kind of jurisprudence is there? What kind of stand can the taxpayer take in this particular scenario?
See, ultimately, I don't think so. Do we have any jurisprudence of this kind where the penalty has been dropped where the ITC was not utilized on the GST? See,
No.
if I take an argument, I will obviously take the same argument that I take in the case of an interest. What is the loss or the revenue loss that has been caused to the government, first of all? If there is no revenue loss that has been caused to the government, ITC maybe you availed wrongly is lying with me in my e-credit ledger. So once there has not been any extra benefit that I have not taken, penalty is applicable only when some benefit has been taken by me which is not given by the law. Only availing and not utilizing the ITC is not any kind of benefit or concession that I have taken under the law, which is there is no benefit or concession there that I have taken. Availment may not be as per the law, but ultimately utilization of such amount leads to an unnecessary benefit to me. So if I have to take an argument, I will take this argument to defend the penalty. But as far as I know, Section 122 reads availed or utilized. All the penalty ITC sections, ITC wrongly availed or utilized. It says or word over there. Now, can we take those judgments where or should be read as an end, and availed and utilized should be used as far as it is concerned. That penalty should only be applicable that when the ITC is utilized, not only in the case of availment per se. That we have to look into, I think.
So,
Anything that you,
so I believe the argument that can be advanced in the given cases, since no ITC was utilized, and hence no benefit was taken or conferred by no benefit was taken by me, and hence when no benefit was taken me, I'll just restart. ITC was availed but not utilized. Even though it was availed, by virtue of me having sufficient balance in the electronic credit ledger, that balance is essentially or analogically is with the government itself, and that is the reason they said no interest should be applicable when you have sufficient balance in the credit ledger.
correct.
So as what you said, since no benefit has been taken by me which was not otherwise provided by the law in a sense, and hence penalty should not be imposed. Obviously the department would not accept this particular argument at the departmental level. I think Anil sir has something to add. Anil sir?
Oh, no, sir. I am talking on the another one case you discussed on healthcare global enterprise limited.
Yes, sir.
Can I?
Yes, sir.
Yes.
Yeah. Sir, in the case, the matter was discussed that there was an medical service agreement between the two hospitals where this SCG was providing their staff, doctors, nurses, and technicians to provide some treatment at the other hospital.
Yes, sir.
Now, suppose if there is no such agreement, like where means in this case, particularly originally the healthcare global service was actually supervising the medical treatment. What the services were given at the another
other
hospital. Yeah. If suppose there is no such supervision, like they have just provided this their doctors or nurses to the other hospital, then still it will be treated as a exempt service, or it can be treated as a services other than like support services or manpower supply services, and can be taxable.
So should I take it?
If basically
Yes.
only the doctors and nurses or the compound this medical staffs are provided, but no supervision of the services given by the main hospital, then.
Sir, I think what I have understood from your query is that if there is no agreement, there is no supervision, and what
Correct.
is simply being done is certain doctors or paramedical staff is being deployed by, say, hospital number A to hospital number B,
Number
wherein
B.
hospital
Correct.
B, patients of hospital B are being treated.
Correct.
Sir, the essence still would be that what the services being provided are healthcare services itself. And from whom are they being provided? From doctors who are rendering healthcare services. So my understanding is very simple. Even if there is no agreement, the substance of this service remains healthcare services, and hence there should not be any levy of tax. It would again be exempt services.
See,
Anything
as
to
far
add?
as I remember, yes, apart from this Dilip Gupta judgment of Supreme Court, there is one judgment, Mother Superior, and there are other judgments as well, in which I think Dilip Gupta says that the plain reading, plain words of the exemption notification should be given the strict interpretation, and it should be followed as per the words written in it. As far as I remember, what this Dilip Gupta Supreme Court says is. But after that, there was a judgment of Mother Superior, and there are other judgments also. Mother Superior again is also of a Supreme Court. Again, what this says is that the essence, what you rightly mentioned, has to be checked of the transaction. Supplying, giving of doctors or nurses is again, in essence, I am providing healthcare services only, because it is not a kind of a staff which other, I cannot provide any other staff who can perform these services. Only a specified technician, I say specified doctor is required to perform those services. Some may also say that they have this profession there. I mean, what a dispute can arise in this case is whether it is a supply of manpower services, can I say?
No,
See,
sir,
or it is again a
my main concern was whether these doctors or paramedical staff can be treated as a supply for technical support or support services,
no, sir.
and then
Only
it can be.
this will always be treated as exempt and the healthcare services only, because the role of the doctors or the paramedic staff is to provide the healthcare services only. They are not going there and providing any other technical engineering or any chartered accountancy services at all. If they are
Got
going
it,
over
got it.
there, their role is to provide healthcare services only.
So even though if it is taken as a technical support also, then also it will be, the sense will be that they will be providing this medical services only
So what kind of
of
technical
Kind of
healthcare
service are
technical,
you?
services.
yes.
Yeah,
What kind of
got it,
technical
got it.
support?
Yeah. This is only, they're just taking, means all medical services taking care of the patients.
Correct,
So
sir, correct.
got
Hmm.
it, got
So
it, sir.
it is more about what classification more suits. Obviously there is some sort of manpower that is being manpower support is there, technical support is there, but the more appropriate classification is that healthcare services are being provided by a certain professional, which has been the long standing view of the CBIC or the industry as well, that healthcare services are not supposed to be taxed so that the consumer cost does not increase. So
Correct.
the
Got it.
essence has to be seen in particular, sir.
Thank you, sir. Thank you.
I think we can close the session now. It's already 1:11.
Sure, sir.
Okay. Thank you so much, everyone. Thank you, Utkarsh, and thank you everyone for joining.
Thank you,
Uh,
sir.
All.
let's meet next time at the same next Saturday at the same time for our 17th session. And I hope everyone comes with many queries this time. I think we can close now. Mahesh ji
Sure.
has written something, and nurse is not being provided.
If the service
Is
of
the
doctors or
service
nurses, if the service of doctors or nurses not being provided by company B, it would
it
have
would
been
other
otherwise
way
quite. Yeah. And so he's
by
essentially agreeing with the view. Yes, sir.
correct. Okay.
Yes,
Thank
sir.
you, everyone. Thank you so much,
Thank you,
Utkarsh
sir.
bhai. Thank you.
Thank you.